In June, during the final stages of the plant turnaround in the OMV Schwechat Refinery, damage occurred to the outer shell of one of the columns of the crude oil distillation unit following a water pressure test. The unit is the core facility within the refinery complex for producing essential products for our daily lives. Immediately after the damage occurred, a broad-based task force took on the mammoth job of restoring security of supply under strict safety measures. In order to ensure reliable supply to markets and our customers, an alternative supply system was set up. Up to 320 people worked around the clock to restore the availability of the crude oil distillation unit. After 4 months and 210,000 accident-free working hours, the OMV Schwechat Refinery is now fully operational again. In a challenging environment, OMV generated a Clean CCS Operating Result of €9 billion in the first 9 months. In a less favorable market environment, the result from the chemicals and materials segment decreased to €1.4 billion. Strong nitro margins could not overcome negative inventory effects and the repercussions of the incident in the OMV Schwechat Refinery. Turnarounds in the Burghausen and Stenungsund crackers, combined with the partial Schwechat outage, resulted in a significantly lower steam cracker utilization rate of 71%. The impact of a decelerating global economy and lower market demand led polyethylene and polypropylene margins to fall by 36% and 31%. Polyolefin sales decreased to 4.25 million tons as demand softened, mostly for consumer products. The refining and marketing segment generated €1.7 billion. One of the main factors that contributed to this increase were the notably higher refining margins in Europe. A strong performance of gas and power Eastern Europe, coupled with improved refining margins and strong operational performance in ADNOC Refining, were also driving this significant increase. This positive development was partly offset by a weaker retail result and the Schwechat incident. The refining indicator margin Europe surged to $13.8, mainly following higher cracks for middle distillates. Total fuel sales decreased by 7% following lower volumes in light of the Schwechat incident, partly offset by improved aviation demand. Retail volumes decreased, mainly due to the missing contribution of the German filling station network, which was divested in May 2022. The planned turnaround in the Burghausen and Schwechat refineries, as well as the incident in the latter, are responsible for the decreased refining utilization rate of 65%. Driven by a favorable market environment, earnings in exploration and production soared to more than €6 billion in the first 9 months of 2022. Average realized oil and gas prices increased to $98.1 per barrel and €56 per megawatt hour, respectively. Hydrocarbon production decreased to 394,000 barrels a day, mostly due to the change in the consolidation method of Russian operations and reduced production in Romania and Libya that could not be offset by higher volumes in the United Arab Emirates. Lower production led hydrocarbon sales volumes to slip back to 383,000 barrels per day. OMV is set to change course and has embarked on a journey to embrace the model of circularity while delivering business success in a low-carbon future. Moving from value chain to value circle, we have defined clear long-term goals and are delivering with concrete initiatives to realize our ambition of becoming a leading provider of innovative and sustainable fuels, chemicals and materials. To pave the way towards a more sustainable way of living, OMV is leveraging its assets and expertise in areas such as sustainable aviation fuels, sustainable plastics, and geothermal energy. So we can embody our purpose, reinventing essentials for sustainable living.